It's not okay. Okay, so today we will deal with something called as external confirmation. Let me share the screen. Where is it? Can you see my screen?
No, sir.
Okay, just a minute. Okay. So let's start with the class. You see, 501 we were done with, which was talking about special consideration with respect to special items. Now we are moving on to something called as external confirmation. What is external confirmation, Abhina? Wherever there is a third party involved, we can get a confirmation from them with respect to the balances, with respect to the terms and conditions, with respect to any disclaimers, with respect to any specific events, activities, whatever we want, we can get a confirmation from them. That basically becomes your external confirmation. So what
Subhash, good morning, Subhash.
exactly are we? Good morning, sir. Solunga.
Subhash, tomorrow I'm not in station. Tomorrow actually my class. Can you handle or I can request Manikandan sir? Are you available tomorrow?
Most likely, yes. What is tomorrow? Friday, la?
Friday.
Can I give you a confirmation by 10 o'clock or 11 o'clock?
Please. Then only I have a time to talk to him. Please.
Yeah.
Thank you.
Okay, sir.
Guys, morning.
Most likely consider it as a yes.
Okay.
Most likely consider it as a yes. In case there is any change, I'll update you.
Please. Thank you. Good day. Good day all. Good day for all. ரொம்ப கம்மி பேர் தான் வரீங்க கிளாஸ்க்கு.
At least today it is better, sir.
7, 8,
today it is better.
10. Fine. Good day to all.
Okay, sir. Thank you. Okay, so yeah, what we will be discussing? Yes, third parties. So because of the presence of a third party, what happens is that the entity, whatever they have accounted, we can get a confirmation from the third party. So if you remember, in SA 500, we had read that external confirmation is more reliable than internal confirmation. Since external confirmation is more reliable, we also need to obtain that external confirmation. So by doing that, the objective is by obtaining this external confirmation, we are trying to obtain that relevant and reliable audience evidence, sufficient, appropriate audit evidence. That is what we are aiming for. So what exactly is an external confirmation? Abdina, they are saying that audit evidence obtained as a direct written response to auditor from a third party in paper or in electronic or in any other form. So audit evidence obtained as a direct written response to the auditor. This direct written response is important. It needs to be addressed directly to the auditor. It needs to be addressed directly to the auditor, not to the not to the client, not to any other party. It needs to be addressed directly to us, saying this is what is the balance. So audit evidence obtained as a direct written response. Written response, Abdina, they can either take a printout of a page and then get it signed and send the PDF, or send it on email saying we confirm with the balances, or they can send it in any other form. They can send a physical letter also. Anything is fine as long as it is directly addressed to the auditor. There have been instances. Sorry, someone said anything. Okay. There have been instances where the external confirmation initially was not required to be directly addressed to the auditor. But later on, what has happened is there have been fraudulent instances where it was identified that the client is changing the information before submitting to the auditor. Because in case of email, what happens is you can modify the information before forwarding the file to the auditor. The same file, when you're forwarding, you will just download, Photoshop it, modify it, and then upload, so that the auditor receives a different file. They will assume that they are receiving the file, but it will be actually a different file. So all these cases, the law has seen, the ICA has seen, and accordingly they have modified, saying it has to be a direct written response. And the best thing about all these standards is that if any fraud occurs in any part of the world, the international standard gets changed. Now, when the international standard is changed, all the national level standards gets changed. So, like example, if IFRS is getting changed, then automatically Ind AS gets changed or AS gets changed. So in India, this is the scenario. In other countries also, whatever the local gap they have, they will automatically change. Similarly, for standards on auditing also, if any international change occurs, immediately the local bodies also will change their standards on auditing and publish revised ones. So if any fraud has occurred at any part of the world, the change will reflect in the standard itself. Okay, so this standard says there are two different ways in which you can get the direct written response. There are two different ways in which you can get the direct written response. So one is a positive request, one is a negative request. What is a positive request? What is a negative request? Positive request under you request the third party to indicate whether they disagree or agree. Rendume. If they are agreeing, yes, we agree, and they need to attach the ledger. If they are disagreeing, yes, we disagree, no, we disagree, they need to attach the ledger. as to why they disagree and what are the reasons for disagreement. எல்லாமே அவங்க டீடைல்டா கொடுத்து they will respond. So the third point is with the requested information or by providing the requested information. This the requested information is coming from the auditor. What is the how the auditor is drafting the email? What exactly are they asking? Are they just asking for balance confirmation? Are they asking for the ledger also? So if they ask for the ledger also, the guy also will respond accordingly with the ledger. So based on the request, the way the email is drafted, automatically the client also will respond accordingly to that, isn't it? So a positive request is where you send out an email or request the third party to respond directly to the auditor by indicating whether they agree or disagree. Both the cases, they need to give a response. They need to give a response. When they give the response, then we can have a better confirmation that yes, okay. So even for agreement also they're replying, even for disagreement also they're replying. It gives a better confidence that yes, this balances exist. Next is the negative request, where the third party will respond only if they disagree. So the email itself will be drafted in such a way that the auditor will say, you don't have to respond if it is a positive confirmation. That is, if they are agreeing with the balances. If they are agreeing with the balances, then you don't have to respond. Please respond only if you do not agree with the balances. So if you are not agreeing, then obviously the client or the third party has to give a reconciliation statement as to what exactly are the differences, why these differences are arising, what are the situations and circumstances behind it, and what is the auditor's stance on it. அதெல்லாம் அப்புறமா வரும். Okay. So positive request, agreement and disagreement ரெண்டுத்துக்குமே வந்து it is a positive request. But here the auditor specifically requests saying, if you respond to this email only if you are disagreeing with the balance. Next, external confirmation procedures. What exactly are the activities that the auditor needs to carry out? How do you get the external confirmation? First, determine the information to be confirmed. So in case there are a lot of transactions and you want a particular transaction to be confirmed, that also you can send across. Or let's say either what is that, goods in transit. Goods in transit la வந்து there will be particular consignments which will be yet to be delivered. So you can send out an email to the transportation agency and say, boss, this is the goods in transit that were there in for this particular day. Kindly confirm if it is delivered or what exactly has happened to them. So they will say only that particular transaction or only those transactions for that day alone, they will give the they will check and they will give the confirmation. Otherwise, you send across the whole ledger and say, this is the ledger and please confirm. Or you send only the closing balance. You send only the closing balance and say, this is what your ledger says, please confirm. It could be a payable, it could be a receivable. This could be sent for both the sides. This confirmation request could be sent for both the sides, because receivable also sometimes it so happens that they may not confirm us. So we need to get a confirmation from the parties. Next is select the appropriate third party. Appropriate third party abdina, the materiality. You need to take into consideration the materiality. Whether it is a small balance balance or whether it is a um, whether it is what was I talking about? Yeah, selecting the appropriate third party. So most likely the third party selection is based on the materiality of the balance confirmation being requested and how important or how significant is that third party with respect to the transactions being carried out. Whether it is a related party, whether it is an external party, whether it is accounts receivable, whether it is accounts payable, how much of the balances have been pending, how long it is due, whether they are going for a legal case, all that stuff you need to take into consideration. So when they say select the appropriate third party, the first and foremost thing that should come is the materiality. Don't send confirmations to small scale vendors. Because one, it is waste of time. Second, even if it ruffles any feathers, it is an unnecessary waste of time for the auditor as well as the management. Because you will only end up wasting time for 10,000 rupees, 20,000 rupees, and all. If you send, obviously it will consume a lot of time. If they give any negative responses and they say they do not agree with the balances, then it is unnecessary extension of time. But if you send confer request for say 1 lakh, 5 lakh, 10 lakh, crores, all that stuff, then it is more likely that your financials or your audit report will have a weightage towards it if there is a disagreement or if there is any record to be made. Next, you have the information that you want. You have selected or identified the third party. Now, what do? You design the confirmation request. That is, draft the email. You draft the email either to obtain a positive request or to obtain a negative request. Next is send the request including follow-up. This follow-up is the major issue. Many a times the people don't respond. They don't respond at all. And that's where the challenge comes when it comes to external confirmation. Whether positive or negative, they don't respond at all. So that is the third type of confirmation by the third parties. So these are the things that are generally done as an audit procedure by the auditor. Next, factors to be considered while designing the external confirmation request. What are the factors to be considered? Assertions being addressed. Ideally, it will be completeness. Ideally, it will be completeness, existence, and then timing. Timing abdina, what period? Period, whether the appropriate period is selected or not. So sometimes from a legal perspective or from a tax perspective, if they say they have accounted in a different period and the entity has accounted in a different period, based on the materiality of the transaction, they may take that into consideration and address that. So completeness, whether all the transactions that were required to be accounted have been accounted or not. Whether if the third party says these are the transactions from our end, you check in the client's books also whether these transactions have been accounted or not. So what they are saying is the transactions are they reflecting in these guys books, that is completeness. Existence, whether that balance exists or not, is the very primary question that gets addressed when you are getting an external confirmation. It could be accounts receivable, it could be accounts payable. When you are getting a confirmation, it becomes a proof that the balance and the party exist. Next, specific identified risks of material misstatement in particular ledgers or in particular some transactions. You find they are fishy. You find they don't have proper PO mechanism. You find they are not having adequate approvals like the other stuff. You find that any question you ask about that vendor, the employees get all haughty. They don't respond properly. They will give they'll shout at you. They'll make a ruckus out of it. All that stuff. If they are doing, definitely there is something wrong with that particular ledger, and that is where you need to dig more. Actually, it is as the psychology goes. Only when a person is doing wrong, they start, doing all these actions and overactions. So you tell them, boss, I'm not here to do any personal work. We are here on official work. If you are willing to support, we'll all be happy. Otherwise, we'll take you for a ride. Evidence following So in case you have identified anything specific with respect to that ledger or with respect to that vendor or with respect to those transactions or with respect to a particular class of transactions, whatever it is, if you have identified anything, then that could be a valid reason enough to send across a external confirmation request. And then the layout and presentation of requests, that is purely with the auditors in the auditor's hand. So again, layout and presentation again is talking about the positive or negative, the way you draft. The way you draft and the information you want to request. That is what you need to take care. Fourth point, prior experience of audit. Previously, did this customer or did this vendor cause any issues? If yes, take them into consideration, send out requests. If no, then you may consider, okay, this has not been a haughty claim. This confirmations have always been occurring. There were not much differences. They have always given priority and they responded properly. All the channels are there. You are well aware of that organization. You are auditing that third party also. All these things need to be considered. If you are auditing the third party also, you don't even have to ask the confirmation. You anyways have their books, access to their books. You can just check. Only when you know that there is a difference between the ledgers, you can ask it formally. Next, method of communication. Obviously, it has to be through official channels, but it could be in paper, it could be in email, it could be in fax, whatever wherever the world is. If they are upgraded, they will definitely send email. If they are still in the 1960s, then the fax will work. If they are still in 1900s, the physical paper exchange will happen. Then the next one is management authorization. If at all the management is trying to influence you from not sending out any requests, then you definitely need to think. An employee coming in between and saying that you have to send out requests definitely a different story. That is where you definitely need to dig and you need to think of the possible scenarios and the reasons behind their denial of request. So that is one of the major factors to be considered. And finally, ability of confirming party to provide the requested information. Very good. Now, there was a Chinese party to which we had sent a request. The thing that has happened is, unfortunately, they assumed that this has happened in real. I'm not joking. We have sent out an external confirmation request, and the Chinese counterpart they have just seen the value and they have assumed that it is a request for new supply. And based on that, they send out a PO saying your new supply is this. Please confirm and make the payment. We will proceed with the production. Then we had to find someone Chinese, make a call across to them and explain them what we want, and then them giving a confirmation. Oh my God. It was a big challenge. So, and on top of that, we were not sure whether this Chinese and that Chinese are the same, because in China, just like in India, how the language varies, China also, it's not a single language across China. There are many dialects, there are many different variations. So one Chinese understanding another Chinese is also a challenge again. So we had to find the right Chinese person, ask them to do the correct translation, ask them to do the correct conversion, and then we sent across the request again. Then they gave back the confirmation saying, yeah, this is the balance, we confirm. So the third party's ability to confirm is also something you need to take into consideration. If they are a small scale organization, there are many organizations which still don't have electronic communications. They may be a big time supplier. Say some scrap sale has happened and the money is yet to be received or the money is yet to be paid. So in those cases, what if the third party, mostly the scrap dealers generally don't have all this electronic stuff. So they tend to deal on paper only. So in that case, what to do, how to do, what exactly to be done. So whether they'll be able to give us the confirmation, all that needs to be considered. Okay. And then with respect to this particular standard, they are giving special circumstances, and they are saying the special circumstance, very particularly, they are talking about management refusal. If management refuses to allow the auditor to send request, so please understand that a request cannot be sent out automatically by the auditor. Whatever request you are drafting, whatever request you are planning to do, you need to request an approval from the management. So because it is their organization and it is their vendors and suppliers. So if you end up doing anything and the relationship between the managements and the vendor or customer gets spoiled, then it is a big risk to you as an auditor. Okay. So in order to avoid such legal litigations or in order to avoid any complications, you always get an approval from the management. Sometimes management will give valid reasons. They will say, no, boss, that company is undergoing restructuring, that company is undergoing so much of issues currently. So even if you request also, they'll not be in a position to do it. Or maybe that company is going through so much of legal trouble, or maybe they are going through some cash crunches. If we ask at this point, they will immediately request for the payment even before giving the confirmation. So we will not be in a position to do all that stuff. The management will explain. So if the management gives a valid reason, you also need to take into consideration because it is ultimately affecting the operations. If anything happens because of your request, it will affect the relationship and the operations. So always before once you have finalized the third parties and the type of request that you want to send across, then you need to get a confirmation from the management whether you can send it across or not. So in those cases, you need to see if they are giving approval. Okay, good, well and good. We can send across the request. If they are not giving approval, you need to see what are the reasons that they are presenting to you. Are they valid reasons? That is one of the major questions. Are they valid reasons that needs to be taken into consideration? If it is a valid reason, yes, please go ahead and get the work done. Otherwise, if it is not a valid reason, or if you believe there is something fishy behind this, sometimes people are very sweet. It's so extremely sweet that you don't realize you are being fooled. So it's really a skill to be like that. And some managements are like that, where they'll be extremely sweet to you, all that stuff, and then ultimately you realize you have been fooled. Okay, so whenever they are refusing, automatically your brain should be on alert. Skepticism, one of the points of essay 200, it says skepticism, always be alert to conditions and information. Whatever the information is, whatever the conditions are, start with a skepticism in mind. Have your brain on alert. If they are saying anything, immediately your brain should think of the possibilities and see what exactly could trigger them to do this. So first thing they are saying, inquire the reasons. Naturally, you ask them why, what is the thing, all that. So based on their responses, you also see whether it is having a major impact on the financials. If that is the case, you can still request them to give a disclaimer. That is much better. You can ask them to give a disclaimer. You can give a disclaimer in your audit report, doing that, saying that there is risk, but we could not contact the vendor or supplier for so and so reasons. We could not contact the customer, we could not contact the vendor, we could not contact the third party for so and so reasons. Abdini, you should give a disclaimer. If they are refusing and you also believe it is a genuine reason, then you need to consider the disclaimers. But otherwise, if they are refusing and it appears to be not a genuine reason, if it is unreasonable or unable to collect the evidence, then try to contact those charged with governance, that is the audit committee. If the audit committee is giving a favorable response, then not a problem. But if the audit committee is also not giving much heed to that, then you need to determine the effect on your audit opinion. Modified, qualified. So modification, qualification, these are all something that are falling under the umbrella of audit opinion. We can discuss this in SA 700 series. So what exactly is the effect that is going to be there on the audit opinion? So if they are refusing and you still believe it is unreasonable, or you're not able to collect any other audit evidence, then this is the first option. Communicate to those charged with governance. If that is also not working out, the natural final thing to do is, the sword in your hand is the audit report. So use the sword effectively. Next. So responses to external confirmation request. Now all this is done. Okay, well and good. Now they have responded. The client or the third party has responded. If their response is creating further doubt, then obtain further evidence. You ask for them for more information, you ask them for a reconciliation, you ask them for further documents, you ask them the reasons, you ask all that stuff, and see why this has not been reflecting here, why there is a difference, what exactly are the reasons, all these things you need to take into consideration. Then, if it is not reliable, maybe based on because of the nature of response or because of the way the response is drafted or anything. Like I said about the Chinese party, they sent out a PO. Instead of a confirmation, they sent out a new PO. So that is not reliable. So in those cases, what do we do? Do we still go ahead with the confirmation, or should we figure out some other alternative route? That is the response that you need to give. Next is no response. They are not giving any response at all. Perform alternative procedures. See if the substantive analytical procedures work. If the analytical procedures are also not working, then see if you are unable to collect any other evidence. Then you determine the effect on opinion. So you're not able to get a reliance, you're not able to get a response, you're not able to collect any evidence, then obviously the only thing that you need to do is give a opinion saying, boss, this is one particular party which is material, but we are not able to obtain any confirmation with respect to it. So we are unsure of the true and fair value with respect to this particular. They have given the documents, but there is a party says this has been supplied, the other party says no, the other party says these are all the documents, this is the signature, this party says no, it is not our employee, it is not our go down, there is no track of it in our system at all the stuff back and forth will go on, it may even go to legal cases sometimes. Okay, so with respect to some ledgers or some ledgers or some particular customers or vendors, there could be transactions which after reconciliation you may find that it may not, it may warrant a disclaimer in the financial statements or audit report. So in such cases, see how it is going to impact the company's balance sheet or financial statements, and whether there is any requirement, disclaimer, or any modification of opinion from your auditor. Next, they are saying negative request is something that you are issuing, you are requesting, but do not use it all the time. Most preferably use positive request to the maximum extent possible. Use positive request to the maximum extent possible. So if not possible, then use the negative request. And what are the circumstances in which you can use the negative request? First one, low risk of material misstatement. So like I said, sometimes you may want to think of balances which are less than 1,000, 10,000, which are low number of transactions. Maybe you just want to get the confirmation. Okay, just ask them to respond only if they disagree. So that is one of the reasons. Second, population consists of large number of small homogeneous account balances. So say there is a fixed amount that is being transacted between both the parties. Like in the case of let's say EMI இருக்கலாம், பேங்க்ல எஃப்டிஸ் இருக்கலாம், இல்லனா you can think of what is that, lease agreement where you pay fixed rentals, and the fixed rentals are almost like EMI only. So all those instances where the numbers are homogeneous, it means the number is the one which is repeating month on month, period on period. It is the same number which gets repeated. So in those cases, the probability of a risk is kind of low. Okay. So it's because there'll be a one uniform document which will have the requirements, everything drafted. So in those cases also you can consider a negative request. So third point is expectation of low exception rate. So you expect that the disagreement by the third party is not possible, or you are also the auditor over there, or you also know people over there. So in such circumstances, you need to consider as to whether you need to take that negative request in consideration or not. Next, fourth point, auditor not aware of circumstances that third party disregard request. In some cases, what happens is that the third parties may not be interested in responding, or they may not be in a situation to really honor your request. So in such cases also, you can consider a negative request. Okay. So here, please underline this. Why are they asking for limited use of negative request? Because it gives less persuasive evidence than a positive confirmation request. Negative confirmation request is less persuasive because we don't know why they have not responded. We are asking them to respond only if it is negative confirmation. So in that case, you don't know whether they have not responded because it is a negative positive confirmation, or whether they are disregarding your request, whether they have seen it and then not responded. We don't know. So because of that reason, they say it is less persuasive evidence. So positive confirmation is the most preferable. But in case you feel the risk of material misstatement is low, or the population is low and the population is large but homogeneous, or there are low possibilities of exception, in those cases you can consider a negative request. And finally, what are the areas where this standard can be applied? Very first, like I said, Satyam scam. The Satyam scam changed the whole scenario of SA 505. If you see, the standards are all uniform, but this SA 505 alone will be inserted in the middle of other standards. So this standard has been specifically inserted in the middle because this was an afterthought. This standard wasn't not initially planned. It was an afterthought. All the other standards you will see SA 500, 510, 520, 530, 540, 560, like that it will go. This one and the 501. 501, anyways, it makes sense because it is both are related. 500 and 501 are related. This one was an afterthought and it was included later on in the standards. Next, accounts receivable or accounts payable. In both instances, you can get the confirmation. Third, sometimes the management may say no because if the balances are huge and you send for a request, they may ask for payment and they may start following up for payments. So, or maybe sometimes the suppliers don't ask for money. So if you send a request for confirmation, suddenly they will come to life and they'll start begging or bothering, or after that they'll start creating ruckus saying you pay, you need to pay. So payable is some area where they may not be able. Ideally, they should be comfortable. Next is stock lying with third parties. Also, like I said, stock lying with third parties, if it is transportation agency, if it is scrap selling agency, if it is any other small scale agency, then it's little difficult to get confirmation from those instances. So you need to check what are the circumstances of them, whether they'll be able to give the response or not before the external confirmation request. Next, property title deed held by third parties. In case of lease or in case of any other agreements where the property title is in your name but it is being held or used by a third party. In such instances also you can get the external confirmation. Next, investments purchased but delivery not taken. Again, it's like a goods in transit, Mari, investments in transit, where there is a system. Once would reflect in your accounts, in your statement. So those kind of transactions you need to take into consideration. Next, loan from lenders, it is similar to bank. A bank loan, the loan confirmation on Wangala, deposit confirmation on Wangala. Or you can have other accounts in a bank like superannuation account or a life insurance account or bonus approval account in Maria escrow accounts and account in Maria. So you get any confirmation. Loan from lenders, particularly those non-banking corporations or outside vendors where lenders who have given the loan or be a consumer also. And lastly, terms of transaction with we have to obtain information only with respect to the balance. This you can obtain confirmation with respect to terms and conditions as well. So some parts of the transaction or say an agreement where it's not very clear as to exact discussion recently happened with one of the and the document was clearly mentioning that there is an addendum to the agreement where all the rates are described. So when we asked the client where is the addendum, the client said there is nothing like the addendum. There is nothing. I've been solicited enough. So we asked if there is no addendum, what base are you making the payment? So then they were like, no, it's verbally agreed and all they were saying. So then we said, not practical, it's not to be done. So if you want confirmation for this payment, you get that supplement or create that supplement document and make a proper documentation. Only you will get our approval updates. They went back and they realized it's already been approved internally, everything happened. The finance manager was not aware of that. So the finance manager, when they started contacting the other operations department, everything, then they shared saying, yeah, this was already there with us. So in those cases, those particular terms alone, if you want to check as to understand what exactly they mean by that. Sometimes the wording may look very simple. The wording may look very soft and good. But if it is placed there, there might be some particular reason why it is being placed there. We need to ask the third party as to understand why or what are they expecting out of this particular discussion. So based on that, you need to take things into consideration. So terms of agreement or transaction with third parties. So these are all the instances where you may get a external confirmation. So that is with respect to the standard SA 505 external confirmation. So just go through things. Give me a 5 minutes break. I'll get back. Okay, so let's get back. I'm being bombarded with calls from work, so just bear with me. Okay, where were we? Yeah. So, what is the next standard? Okay, we are done with 505. We can take up SA 510, initial audit engagements, opening balances. Just like how they have been very specific about what was that? Special considerations with respect to audit evidence, SA 501. With respect to that, they have given some special considerations. Similarly, in the case of opening balances, also they have said these are certain things that you need to take into consideration because they have a material impact on the financial statements and the audit report being issued. So, with respect to that, they have certain things to say. Let's see what they have in mind. Where is SA 510? Yes, it is. Yep. Mm. So what we have next is SA 510 initial audit engagement. So with respect to, and particularly with respect to the opening balances, they are giving certain guidelines. So the first one is they are defining what exactly an audit engagement is. Initial audit engagement. So what exactly does that mean? That means this is the first time for you when for auditing that particular entity. That means you have not audited this organization in the past few years, or you are auditing this organization after a long gap of time. So, if it is called as an initial audit engagement, it basically means either the company is new or you are new to the company. Either the company is new to you or you are new to the company. In those cases, basically, it is considered as an initial audit engagement. So, an engagement in which financial statements for prior period are not audited or were audited by predecessor auditor. This can happen in a various number of circumstances. Either the company is new or the company has been a private organization with small turnover, with no requirement for banking loans or any other stuff, or with no requirement for external support. They have been growing on their own, but now suddenly when they needed external support, they require the audited financials. So in those cases, they will definitely approach an auditor and say, boss, we need a audited report so that we can submit to bank or we can submit to the third parties and request for further funding. So initial audit engagements arise when either the company is new or they are now upscaling or converting from that private to public, where they start getting the things audited, or When it is an existing company, but it was audited by someone else all these years. So, now you have this rotation of auditors concept. So every once in a while, it will become a new thing for the new auditor. Next is the opening balance. What exactly is an opening balance? Please understand, when they talk about opening balances in this standard, they are referring to two things. One is account balances and also the disclosures with respect to it. So one is account balances, that is the ledger balance, and the second thing is the disclosures with respect to that. So both needs to be considered and taken into consideration. So opening balance is not just the balance, but also the disclosures that come along with it. Next, what exactly is expected out of us in this particular standard? First, opening balance. So opening balance, naturally, this is the focus of the standard. So we need to get some particular confirmations with respect to this number. So what exactly are they? How do we do that? First, read most recent financial statements and auditor report thereon. So first, read the latest financial statements, previous financial statements, previous audit report, படிங்க. அதுக்கப்புறமா obtain sufficient appropriate audit evidence with respect to existence of any material misstatement. That means, in the previous audit report, if there are any particular line items where the auditor himself has given highlights, or there are disclaimers, or there are certain highlights in the either in the audit report or in the financial statements with respect to certain balances, in those cases you need to take things into consideration and see why exactly they are different from the numbers being quoted or reported in or by the current in the current financial statements. So first way of doing that is obtain sufficient appropriate audit evidence with respect to existence of any material misstatement by determining the correct brought forward or prior period correct brought forward balance of prior period closing balance. So take the last year TB closing balances, check whether it is matching with the opening balances of the current year TB or not. This is one thing that needs to be taken into consideration, because I see this very often and with respect to some particular organizations where the opening balance itself keeps changing, and this is not appropriate. And that is one way you can figure out any frauds, because let's say the revaluation reserves or the retained earnings reserves is being changed. The previous balance and the current balance is not the same. Rest of the TB is remaining the same. In those cases, you need to understand why exactly these balances are changing. What exactly is triggering them to modify the change trial balances after the audit report has been issued. What exactly is the entries that were posted? All that you need to obtain the sufficient appropriate audit evidence. Next is determining application of appropriate accounting policies. Most likely, this needs to be taken into consideration whenever there is a change in the accounting policies. Let's say IFRS on leases. So there was significant change in the way these things were communicated, or the way leases were defined. There was a significant change in that. So as an auditor, there may be as an accountant or as the management, there may be a requirement for you to go back in time and restate the opening balances. Let's say there is a change in depreciation methodology. So obviously the opening balance of the closing balance of the previous year itself will change, right? Because it has to be done retrospectively. Go back all the way to the first date of the asset and change the balances right from there. That is what you do, isn't it? So you try to figure out as to why this change has happened. Okay, there was a accounting policy change. All right, based on this accounting policy, this should have been the balances. Now this is the balances. Okay, this matches. Okay, well and good. Otherwise, if it is not matching, what are the assumptions the management has taken? Why exactly there is a difference? Or if it was not possible to be amended retrospectively அப்படின்னா going back in time and applying from the starting of that transaction, அது பண்ண முடியல, இந்த வருஷம் தான் பண்றாங்க அப்படின்னா லாஸ்ட் இயரோட க்ளோசிங் பேலன்ஸும் இந்த வருஷத்தோட ஓப்பனிங் பேலன்ஸும் there is a possibility of mismatch. ஸோ சேஞ்ச் ஆகிறதுக்கு வாய்ப்பு இருக்கு. அந்த சேஞ்ச் வந்து வெதர் இட் இஸ் சப்ஸ்டான்ஷியேட்டட், வெதர் இட் இஸ் documented, whether the appropriate policies have been considered, all that needs to be analyzed. Next, if any misstatement detected from performing additional audit procedures to determine their effect on current period financial statements. If any material misstatement is detected, perform additional procedures to determine their effect on current period financial statements. So while doing all this analysis, if you find any misstatements, whether they report it in the previous year, that is one question. If they have reported anything in the previous year, you need to check in the current year if that is still holding good or not. Sometimes they may say that inventory we have not been able to audit அப்படின்னு last year சொன்னாங்க. Inventory audit பண்ண முடியல எங்களால next year. Is that the same thing that is carrying on? If it is carrying on, it is a risk of material misstatement because the entire inventory is something that you are not able to comment on. So you check if this can be done this year. What were the circumstances surrounding which the auditor could not audit that last year? அதெல்லாமே analysis பண்ணி in the current year apply பண்ண try பண்ணுவோம். In the current year, if it is carrying on, if you are not in a position to apply or do anything about that, or say there are certain balances in the accounts payable, accounts receivable, on which the auditor has given a comment, and they are carrying forward without any change, without any action from the management. So what is the thing that you can do to mitigate that material misstatement? All those things you need to see and determine what is the effect in the current period, because you are auditing in the current period, right? So as an auditor in the current period, what is exactly the effect of that? All that you need to analyze. And if there is an effect, you need to talk to the management boss saying, this was required of you last year, this was the thing last year, this is the same effect this year, or this is the misstatement that is continuing this year. Or maybe from not the audit report, but because of some changes, there have been differences with respect to the closing balances and opening balances. So these are the misstatements with respect to those changes. I have identified them, and these are the things that needs to be taken into consideration. அப்படின்னு சொல்லிட்டு you need to talk to the management and those charged with governance. So this is the very first thing. So these 2 points you need to take into consideration. First is the previous year reports. Second is the trial balance. Compare as it is. Try to obtain the previous year balances, the current year balances. See if there is any match, if there is any mismatch. This happens quite a lot whenever there is a change in accounting software. So one of the disclaimers I have seen from an auditor with respect to this is that there was a change in accounting system, and during that change, what has happened is, fortunately, the change was successful. But once the change happened, the old system got corrupted. So that means all those years of data has successfully migrated as a balance only. Only the balance mattum it got migrated to the new software. But unfortunately, all of that old data has been corrupted. Now, it is a big task. It can be corrected, but it involves a significant cost to the organization. Already, they have spent so much on the new software that they were bleeding. So they didn't want to go ahead and spend further on the old software. So they decided not to do anything with respect to that right now. So, yeah, okay, well and good. If you're not doing anything, you still have a new software, new things in place, everything. The new software was very good. It was running perfectly for the organization. All that is fine. But, but how will you get the transactions of the last year or the previous last year? You don't have any record. Your existence have been wiped out, and only thing that you have in hand is the physical vouchers and that particular balance. That's all. You don't even have the ledgers. You don't even have references. You don't have anything to deal with. Okay. So this is basically a big misstatement because you need to give a disclaimer saying, boss, there is transactions, there is balances that are available, but the company does not have the track of those transactions because of the software mitigation and the migration issues. So this was one of the disclaimers that was given in one of the audit reports. So these things happen, and it is not just with respect to previous financial statements, but also with respect to the opening balances. If there are any misstatements, that also needs to be taken into consideration. Next is consistency of accounting policies. Why you need to consider the consistency of accounting policies? The very first reason is that there is IAS 8. International Accounting Standard 8 is there. There is an Ind AS corresponding to that, the accounting for the standard on accounting policies, which specifically says that if you want the financial statements to be comparable, if you want the financial statements to be readable, understandable, comprehensible, analyzable, then you need to be consistent in applying the policies and procedures. One month you cannot take one step, another month you cannot take another step. It's like doing the taxation in old regime in 1 year, new regime in 1 year, again old regime, new regime, old regime, new regime. This will create confusion for yourself also, isn't it? So this is something that needs to be carefully analyzed. You cannot just jump here and there. Okay. So having that consistency brings out a financial statement which is far more comparable, which is far more understandable, which is far more analyzable, because the balances have been arrived at by considering the same set of conditions, isn't it? So similarly, as an auditor, you need to check whether they have applied those policies consistently or not. So with respect to that, first you need to check the consistent application, and second, proper accounting and disclosures. Take simple things like depreciation. Depreciation last year to this year, was there any change? If there is no change, it automatically means not the accounting entries if there is no change. I'm talking about the policy. Is there any change in the method or method of depreciation? இல்ல அப்படின்னா it means last year எந்த மெத்தட் யூஸ் பண்ணாங்களோ இந்த வருஷமும் அதே மெத்தட் தான். அதனால there is consistency of accounting, the policy application. Next, proper accounting and disclosures. Let's say this is what should be the number. அந்த accounting entry and the ledgers பார்த்தாலே உங்களுக்கு தெரிஞ்சிடும் whether the accounting has been done properly or not. With respect to the disclosures, with respect to depreciation, what are the disclosures required? What are the notes required? Everything you check. So then you will be happy or confirmed or have a satisfaction that this is true and fair. This is one example that I've given with respect to depreciation. You can think of revaluation or let's say fair value analysis. You can do the impairment testing or revaluation analysis once in every 2 years is the industry standard. So based on the situation of the company, maybe it was a practice to test every once in 2 years. But say suddenly Corona has come and you had to do the impairment testing in the second year, it's in the first year itself. Last year it was tested, 2019 it was tested, 2020 again you had to do testing because of the larger global scale or a major scale event that has happened. So in those cases also you need to see if there is a different deviation from the regular application. It is definitely a change in accounting policy, because once in 2 years, all the previous financial statements were reflecting once in 2 years the effect of impairment testing. But this financial year is a deviation and it is reflecting the impairment in the very next year. So it definitely has an impact on the financial ratios and analysis. When you do that, it will definitely have an impact. So you need to see whether this has been properly dealt with, whether proper disclosures have been given, whether proper accounting has been done. All that stuff you need to take into consideration. Third point, they say with respect to modification. So, like I said, if the previous audit report contains any disclaimers, any modification of opinion, any qualifications, in those cases, you need to evaluate the effect of that modification in the current period. Last year, they said there is effect on going concern. BSNL, few years ago, it was reported that there is an effect on going concern. But அடுத்த வருஷம் அதுக்கு அடுத்த வருஷம் வந்து the auditor was fired and a new auditor has been hired. And the new auditor வந்த உடனே the BSNL reported 10,000 crore profit. Just imagine where a going concern of negative 5,000 crores lande, the company has reported a positive 10,000 crores in the net profit. Just imagine, it's a staggering amount of comeback. For negative 5,000 lande, you have achieved 15,000 crores of positive profit to report a net profit of 10,000 crores. And last year, there was a disclaimer about going concern. Just imagine the situation. The auditor is saying, I doubt the going concern of this organization. Negative 5,000 crores is nothing for a BSNL because it is a government backed organization. But giving the disclaimer on the going concern is where things triggered. Giving a disclaimer on going concern means, in spite of it being backed by a government body, this organization has something very critically wrong, because of which it cannot, or there is a doubt whether this will operate after 1 year or not. That is what going concern is. So, in spite of the auditor knowing that it is being backed by the government of India itself, still he has went ahead and given a disclaimer on the going concern. That means there was something fundamentally very wrong with that organization. Okay. But the very next year he was fired and another auditor was hired. So in that case, this auditor, the report that they have given, there was no comment on the going concern. There was no disclaimer or any adverse opinion in that year. And there was even a profit of 10,000 crores that was reported. So these things you need to take into consideration and see. Last year there was a modification. This year, whether this is applicable or not, you need to take that into consideration. Let's assume it was a fair scenario. Both the auditors have not done anything wrong. You just take a basic analysis. Last year it was a negative 5,000 this year there's a positive 10,000. Obviously, there is profit. Obviously, you can take it into consideration that the going concern will not be affected. So that way you can say, okay, there is no modification this year. Last year, there was a comment on the inventory saying there is no inventory or the existence of inventory is doubtful or there was a fraud in inventory. This year, you need to retest those areas and see whether the modification continues to apply in the current year also. Last year, there was a comment with respect to the investments, saying the investments have not been properly valued, the investments, they don't know where they are, the organization has so many investments but in the books but they don't belong to this particular entity. All that stuff they have discussed. So this year also you check whether the modification continues to apply or not. Please remember that whenever there is a modification or a disclaimer or a qualification, anything, that change will be with respect to that particular line item only. Okay. So if you are saying I am giving a modified opinion, then you need to specify as to against which item in the financial statement this modification applies to. Let's say it is applying to inventory only. It is applying to going concern only. Then you need to specify that my modified opinion is only with respect to inventory and going concern. The rest of the financial statements still present a true and fair view is what is the understanding of that. Getting my point clearly? What I'm saying is, if there is a modification or a qualification or a disclaimer in the audit report, then any adverse comments in the audit report, in those cases, you need to understand that that modification, disclaimer, adverse opinion, whatever qualification is there, it will be with respect to particular line items in the financial statements. It will be with respect to some particular line items only. And by default, it means that except for those line items, all the other line items present a true and fair view. That is what the modification or qualification means. That is why we need to see whether the modification is still applicable in the current year. Next, first we were dealing with the audit procedures. Now we see with respect to the conclusion and reporting. Again, these three things are the focus. First, opening balances. Were you able to obtain sufficient appropriate audit evidence? Last year it was not audited. Now you want to see. Last year it was audited, Abdina. You can at least place a reliance on the previous audit report and say, okay, boss, they have already audited, so I don't have to do much of a checking. But if there is a risk of material misstatement, if there is a fraud that you have identified, if there was no previous auditor in the organization, in those cases, you need to go back in time and see whether there are anything that you need to take into consideration. In those cases, you need to see how to deal with that. If you are not able to obtain the audit evidence that you need, then you need to give a qualified or disclaimer of opinion. What is a qualified opinion? What is a disclaimer of opinion? We will discuss tomorrow because these words are coming very often, and after 510, the main standards start. So I will give you an explanation, a brief explanation as to what exactly is qualification, what exactly is a disclaimer, what exactly is an adverse opinion, all that, what exactly is a modified report. We will discuss that tomorrow. So, but for now, just keep it in mind that if you are not able to obtain a sufficient, appropriate audit evidence, see, for you to comment something negative or positive, there must be something for you to talk. Okay. There must be some document, something for you to work on. When you you are not able to obtain the audit evidence itself, then what can you do? Only give a disclaimer, isn't it? Isn't it? So you can only give a disclaimer. Yeah. So if you are not able to obtain the audit evidence, give a qualified report or a disclaimer of opinion. Next. This year, they contain material misstatements not properly accounted or disclosed in the current year financial statements. You have done the audit and you have identified that there are some things that needs to be taken into consideration or which were not reported last year, which have been modified in the current year. All that needs to be taken into consideration. So when you say it was not properly accounted or not properly disclosed, that means you have some evidence backing up, your understanding that it was not properly accounted. So when you say it was not properly accounted, you need to have some proof or some document saying this was the right way of accounting and this is the accounting these people have done. So this is the deviation. That is why there is a modification, there is a adverse report. Okay. Where you couldn't get the audit evidence at all. There is nothing for you to work on. That is why there is a disclaimer. But when you have audit report evidence to work on, and in spite of that, you are not able to say with satisfaction that it is presenting a true and fair view, in those cases, you give a adverse opinion. Consistency of accounting policies. Again, consistency of accounting policies. It is very clear. Last all these years, there was one particular accounting policy applied. This year, they are not able to apply the same accounting policy. So why is the change whether it is accounted properly in compliance with the Ind AS or not? If it is not accounted, then you need to take things into consideration and give a adverse opinion. Again, please note here, when you're talking about change in accounting policy, every evidence that you want is available. Last year, you have so many financial statements. Last year, you have so many ledgers. This year, you have ledgers. Why there is a change? Why there is a difference in amounts? Why there was a requirement for certain entries? All that there is physical evidence backing up your analysis. So in those case, you can make a pakka, adverse opinion saying no, they have not applied the accounting policies. That is the adverse, and then there is modification and predecessors audit report. Again, if the previous audit report was talking of a modification, then and it remains relevant for the current year, then obviously you also need to give a modified report. Modification and qualification are two different things. We will discuss that tomorrow as to what exactly is the difference, what is the thing. I'll give a brief note only because there is an entire standard on this. So that is what is the conclusion with respect to this. This is SA 510 and we are done with it. So only applicable for initial audit engagements. That is the first thing that you need to note about this particular standard. It is applicable only for initial audit engagements because as a new auditor, you need to have comfort that the opening balances that you are dealing with are correct or not. So the whole discussion of this was only with respect to opening balances because this is particularly about initial audit engagements. So that is all with this standard. We will stop here for the day since I need to leave early for office. So hopefully we can cover up on the lost time tomorrow. Let's try to target a longer class from 6 to 9 if it is possible. Okay. Thank you everyone. Have a good enjoy your Thursday. Thank you.
Thank you, sir.